Welcome back to the Dividend Diplomats YouTube channel. You got your favorite dividend investors here, guys. The one, the only, the Bert, the Hurt, and Lanny, guys. Welcome back to another conversation, a little fireside chat, as we like to call it. It's about not being afraid to invest in ETFs during this volatile 2025 and how you can still generate solid income, solid growth, and solid appreciation.
Smash that subscribe button. Give this video a thumbs up. Holla at your boys. The Dividend Diplomats. We started out buying individual stocks, individual dividend stocks, and we've evolved over time to not only buy individual stocks, but also buy dividend-focused ETFs, S&P 500 ETFs, and individual stocks. So this will be a fun video talking about both and seeing how it's performed over time.
Yeah, I mean, guys, here we are, February 2025, filming this February 6th at night. Stock market set new records, drop from records. We've got the new president's in town, tariffs, who knows what's going on still with interest rates, just with inflation and potential 2 to 3 rate cuts this year. And Bert and I were talking, he mentioned, with wars going on overseas, and there's just a lot that impacts everybody's decision when it comes to investing, right, Bert?
Yes, and there's a lot of noise no matter what administration is. So this isn't like a one specific administration thing. Every year, stuff happens that could impact the market, things that are outside of your control, outside of one country's control. There are other things that happen in other parts of the world that can cause things to happen, can cause interest rates to drop, interest rates to spike. I mean, I could probably tell you going into 2020, Lanny, January 2020, nobody would have expected a global pandemic to happen either and to shake everything up too. So you never really know where the shock that's going to impact the market's going to come from.
Right. Record low interest rates, record high interest rates.
Yeah.
So today's video is going to be about showing you the proof that, maybe sticking with an ETF as like your foundation, grabbing some individual stocks that you understand, that you enjoy, that perform well, could be a great route as well. Again, we still buy individual stocks, but Bert, he buys SCHD and VIG every single week. I buy my Vanguard trifecta, you betcha, every single day and every single week with VOO, VIG, and VYM. So we thought today on, this video that we'd really go over the year-to-date 2025, the last 52 weeks, in the last 5 years of some of these 4 massive ETFs that we buy, and then comparing them at least to like some of my, 5, 6 to 7 largest stock positions in my portfolio. And to see, am I really outperforming by holding the individual stocks, buying the individual stocks, or have I been better off really just buying the ETFs? And, you really need to strike that good balance that aligns with your personal finance, goals. Obviously our goal is to build passive income, build a massive growth machine, and get to financial freedom earlier. I mean, Bert, when we talk about ETFs, it's hard not to talk about Vanguard's S&P 500 ETF, VOO, because they are one of the most popular, if not the most popular ETF out there in the investing game.
That's right. So how has VOO performed? Year to date, they're up 3.75% to start 2025. 52 weeks, they're up 22%, 22.82%, excuse me. Then the 5-year, 82.63%. So predictably, like the S&P 500, VOO has gone, and we've seen great returns for the overall market in this time frame.
Yeah, just straight returns. Not a down period in those 5 years that we're looking at here, whether it's this year or whether it's over the last year or whether it's 5 years. Similar drum with SCHD, Bert. I know you buy that every single week. You've got solid 5-year performance as well.
I don't know if I call it quite a similar drum, but yeah, they're over this year to date, they're up 1.8%. Last 52 weeks, 8.48%. So yeah, up, and then 5 years up 42.38%.
So, if you would have just been buying SCHD, you wouldn't have to worry about Intel, the Paramounts.
We're getting plots. Yep.
We're getting plots, even the Pepsis, the J&Js, which we're going to get to on this list.
So why don't you, why don't you talk about VYM then, Lanny, since that's the big one that you've obviously been buying.
Yeah. So VYM, this year in 2025, they're up 4.5%. They're up about 18% in the last year, and they're also up about 42% in the last 5 years. So you're getting, similar to SCHD. SCHD's got a high yield, 3.5 to 3.75%. VYM's in that 2.75 to 3.15% yield range. So you're getting the yield, you're getting dividend growth, but you're also getting the price appreciation, with VYM, very comparable to SCHD's performance.
Yeah, so let's move into VIG, where we can talk about the fund that appreciates dividends like no other. VIG is up 4.44% year to date.
Yeah, beating VOO here. VIG, let's go.
Yeah, they appreciate the appreciation too. Over the last 52 weeks, they're up 16.95%. 52 weeks, they are up 58.24%. So pretty solid. That's where they're trailing VOO, though.
Yeah, they're trailing VOO in the 5-year, but outpacing the dividend ETFs over the 5 years. So very interesting. Again, you would have just been buying VIG. You had a pretty good dividend snowball. They yield closer to 2% with a 7 to 12% dividend growth, and you could have had 58% return in 5 years.
Yeah. So those were the four funds there. Again, the performance of VOO, SCHD, VYM, and VIG, all pretty solid, different percentages, right? Let's compare it though, Andy. You said you want to talk some individual stocks, some of your larger positions, to see how those are performing over the same periods.
Yeah, like when you bring up like the plastic industry, Visa as a beast in my portfolio, one of the largest holdings, one of the best returners. They've actually had a really good run so far in 2025 and the last year. So this is not to say buying Visa has been a bad investment. It's been a great investment.
I don't know. That's
but it has. But it's underperformed the S&P 500, guys, in the last 5 years. They're up over 10% this year, up 25% since last year, up 71% in the last 5 years. But with, Bitcoin and other, cryptocurrencies, could that alter the payment space? Could, Venmo, PayPal alter the payment space, continue to take share away from Visa and MasterCard and the big plastics? There's a lot more competitiveness in the space versus lack thereof, like they used to have. So again, there's a lot of unpredictability with what can go on in the space, especially with all the people going against the interchange fees and trying to fight, what is being charged on the institutions and consumers.
Yeah, that's a fair point. So let's move into industries right now that are also unpredictable. Let's talk Lockheed Martin, ticker symbol LMT. I know this is one of your original positions. Lockheed's had a tough 2025 as turmoil's everywhere in the world right now. LMT's down 6.99%. Last 52 weeks, they're only up 5%. But then you stretch it over a 5-year period, they're only up 2.13%. So if you've bought and you hold Lockheed for over a 5-year period, you're basically flat plus your dividend. So that's the interesting part of Lockheed.
Yeah, who would have thought that with just how well they performed probably to the previous 5 years. So we're in quite a lull period, obviously with the wars going on with, I know that the DOGE of the governmental efficiency group is not supposed to be touching the defense budget, but there's a lot of unknowns that could happen with the amount of spending that happens on defense.
Yep. So let's move into insurance, everybody's other favorite sector. Let's talk about Aflac, ticker symbol AFL. Year-to-date, Aflac's flat, 0.7%. Over the last 52 weeks, they're up 34%. 5 years, up 94.75%. Aflac's been crushing it, and they are outpacing the S&P 500 over the last 5 years.
Yep, this is the one stock out of my largest holdings. Again, this is a huge position in my portfolio that's actually done better than all of the 4 ETFs, obviously. Now here's the thing. We're going to go through about 7 stocks. This is 1 out of 7 that has outpaced the S&P 500. So you have to keep that in mind. As a dividend investor, you might not be getting the greatest returns, on some of these incredible companies such as, Lockheed, Visa, and even Aflac. But again, been a great stock. But that's 1 out of, you'll find out here, 1 of few here.
Let's talk about everybody's stock that everyone loves to hate. Johnson & Johnson, ticker symbol J.
Everybody used to love, now everybody wants to hate. It's so amazing.
I know it is. You get some angry people if you put a post on X about Johnson & Johnson. Man, people love to beat this king down. It's very comical, to be honest with you.
Speaking out here, I'm going to put one out right now as we talk.
You do that while I put out the metrics here. Johnson & Johnson over a year to date, 6.59%. When you're done, hold up that phone so everyone can see that this thing went out.
Yeah.
Went down 2.88% over the last 52 weeks. Last 5 years, up 1.07%. So Johnson & Johnson has been flat, but they've also had their spin-offs, their split-offs with Kenvue. That's the thing, that the argument you hear from a lot of people is over time, there's no such thing as a true buy and hold. Johnson & Johnson, the case where you felt pretty stable about them 5 years ago, where it's a completely different company, a complete division's gone just in 2025. Absolutely wild how much they've changed. There it is. Oh,
Oh,
boom.
because I got blurred background going.
Yeah, J and J. We see it. We get it. We're not, we,
Yeah, yeah.
Hey, if you want to see if that's a real tweet or not, just go to our profile. That link's down there below. We'll put the link to our X profile.
Exactly, guys. So yeah, J&J. Hey, up 6.5 though percent this year. Don't call it a comeback. Let us know in the comments if you own J&J stock.
Yeah, J&J stock. Next, Procter Gamble, another one of our top 5 foundation stocks. Year to date, up 1.75%. 52 weeks, up 6.24%. 5 years, up 33.95% for P&G.
Again, another stock that over the 5 years has lagged all of the 4 ETFs. Again, you could have just SCHD'd or VYM'd and chilled and still been a better performer, a better yielding, and a better dividend growth stock. Then we got Pepsi, guys, another dividend king. Again, there's a lot of kings on this list. When we think about J&J, PG, now we're talking about Pepsi. Pepsi's had a terrible run the last 5 years. Essentially, you're also similar to Lockheed Martin. You are also now just back to even with your investment. They're down 3% this year, down 15% since last year. Obviously, if you didn't catch Saturday's video, they did announce a dividend increase of just about 5%, but weaker guidance because of the hoopla that's going on the health concerns with the food and beverage industry.
Speaking of stocks that people love to hate right now, Pepsi. I don't know who people hate more, Pepsi or Johnson & Johnson. It's pretty close 1-2. I feel like nobody likes Pepsi right now. It's wild. Still
It
great
is wild.
company. Still great company. Last, but definitely not least. We thought you didn't like the defense sector. We thought you thought insurance was boring. We thought you guys hated Johnson & Johnson. Let's talk banking. Who's this last one here on this list, Laney?
One of my insanely large positions in my stock portfolio, Canadian Imperial. We're going north of the border, CM. And, with everything that's going on from a tariff standpoint, and for them, really the interest rate standpoint in the economy in Canada, that's had a significant impact. But the wildest thing is they're up 38% since last year, and they're up 50% over the last 5 years. When you think about the banking industry really beaten up over the pandemic, and it took them a lot longer to come out of it, especially with the liquidity type crisis that was going on. So here they are up 50%. So outpacing, the dividend ETFs of SCHD and VYM, but still lagging VIG and VOO.
Yeah, and that's crazy. So just to summarize here, you put together these 5 stocks and compare, not 5 stocks, 7 stocks, and compare them to the 4 ETFs. I don't know where the number 5 came from,
That
but
just sounds better.
yeah, so only 3 of the stocks are beating some of the ETFs over the last 5 years. Aflac's the only one that has performed better than all of them over the last 5 years. Visa has performed better than all but VOO. So Canadian Imperial's performed better than all but VOO and VIG. The rest of the individual stocks lagging the ETFs over the last 5 years.
And again, these are some of the most coveted dividend stocks in the industry. Lockheed, again, J&J, PG, Pepsi, you name it. So it's not a bad thing, guys, to set up on a good frequency to add the ETF, just chomp a little bit there, whether it's SCHD, VOO, VYM, or VIG, just find out what works with your personal finance strategy, because there's a better chance that you'll do well and outperform the individual stock performance.
And it's not to trash buying individual stocks either, but there's been an explosion of ETFs over the last 5 years that have allowed investors to just not deal with the individual stocks. Find ETFs. There are ETFs for all shapes and all sizes, and we can start featuring them more on our channel here. So you can get an industry-specific one. You can get a growth target one. You can get yield targets. You can have income-specific ones. There are a lot of ETFs for all shapes and all sizes. So they're out there. There's more than one way to skin the cat, I guess is the moral of the story.
Yeah, so let us know what ETFs you buy regularly, or what are some of your larger individual stock holdings and how have they performed against an indices of your choosing. Let us know, guys, in the comments. But don't forget to like and subscribe, guys. Let's just keep freaking saving as much as possible and investing as much as possible and get to financial freaking freedom.
And remember, you're either with us or you're against us, Jack.
That was Bert the Herd and Lanny from the Dividend Diplomats. Over and out.